Good evening, peoples. I wanted to talk about four launches well, they're not launched, they're applied for. So let me get into this. It's going to be a little lengthy because I'm going to take you to the SEC filing. Um, Kind of excited about this because Global X launches, or I should say applies for, but they will launch um, four new funds, and they're all part of the capital rotation to a commodity supercycle. So all that stuff I've been saying, and I've said, look, there are new funds coming. One of them is the first in its category. I'll talk about that. So, who is Global X? Well, they were acquired about 8 years ago in 2018, 7.5 years or so from Mirai Asset Global Investments. Who is Mirai Asset? Well, they're a bigger exchange traded fund, right, that acquired Global X the 7.5 years ago. Mirai, what's that word mean? It's a Korean word. It means future. So while they're not in the top 3, 5, 10, or 15 families in the US, they're very well known for their thematic type funds, sector, and so forth. So look at the growth of Global X, even underneath Mirai. So they've gone from being acquired in 2018, right, which is 7.5 years. Um, they have 13-fold, more than 13-fold grown their assets under management. So they now have 101 ETFs in the USA. So these four aren't included in that number because they haven't launched. So what I wanted to also, before I dive into the SEC, because this one's fascinating, it's got some names that some of you from the high yield space will recognize and not necessarily like. I don't like some of it, but I tell you what, Global X has been a performer. So who they choose as the option fund manager or who is running the options, what firm, maybe mixed, but I am excited about what this does. And I'll get into that when I read to you the details, because it is quite detailed. All right. So what's Global X done just in the commodity space? So I looked through the list of 101 funds, their year-to-date performance, they had 3-year, 5-year, all of that stuff. You can go out and check for yourself. I grabbed the interesting aspect to show you guys just what some of the commodity funds have done. And I'll talk a little bit more about that. So anybody hasn't figured it out, you're probably tired of me saying it, but I have to keep saying it because most of you aren't paying any attention. Most of you are doing the same old things you've been doing, right? That's why I created Patreon, so I could get somebody that really cares about it, and that's growing. It's nowhere near, I've got 300 people over there. I'll probably have 3,000 by the time retail comes into this space in the next 12 to 24 months. And they'll only do that when they keep seeing outperformance, right? Let's see if Bitcoin can wake up and perform. It clearly has not. It's just been beat to hell. I hope for a lot of people that it does because I know a lot of people are in it. I don't fear at all that it impacts our commodity super cycle because I said this in another video, just FYI to you guys. I had sort of an epiphany because the classic verbiage has been, well, Bitcoin is digital gold. It's a store of wealth. It's a safety play, right? It's outside government control. It's limited supply. All of that. And you'd see outstanding performance. Michael Saylor and MicroStrategy that became Strategy had a premium to Bitcoin. That's gone away. Bitcoin itself has gone horrible. If it's winter, that's fine. But I think for the old faithful, it does need to wake up and get moving because assets will flow out. It's not even performing as well as the NASDAQ and the tech sector, which it's been following. Instead of being, central banks aren't buying any of it, they don't want any of it. There's also some rumors out there that JP Morgan and some of the banks are really afraid of the blockchain technology underneath. Again, I don't claim to be an expert on all that. I know more about the commodity super cycle and what drives that and what elements play and how the whole capital rotation thing. Bitcoin, I understand the technology, right? And some of it's fantastic. So I can see why legacy banks may not like it and may not want it to replace their slow, outdated methodology of moving money around and all the fees. I get it. But the fear a little bit is the CBDC and where you get government control and they start, giving you all of your social payments, if you will, through it, and then start looking and say, "Oh, you ate too much candy. We're going to fine you if you spend money like that, or you went to the movie theater too many times." That intrusiveness that nobody wants, right? We want the freedom to spend the money the way we want to spend it, not be scrutinized by a central government looking at what we're buying. And this has nothing to do with politics, just cross the aisle. All right. So, what about availability? I'm going to get into the fund. So, right now, my best guess, and actually, it's probably a very educated one. I almost was spot on Roundhill's launch of GDXW and GLDW, right? The miners based on GDX and then gold based on GLD. Well, these funds are got two components similar but really different, and they're fascinating to look at. And then you have a rare earth REEs, right? I've done videos on that. That's hot, especially in the commodity super cycle. Critical metals, right? We're losing technology race to the Chinese who have been dominant and the Russians. They both have a lot and they've gone to Africa and other continents and did deals with countries to take theirs and fuel the mining of those and get production delivered back as the payment for helping them build a revenue stream and get it out of the ground. So the U.S. has got to catch up. So the legislation is in place, the investments are in place. Let's see if we can perform. So based on best guess availability, 75 days from November 21 is February 9th. And that's the filing date. All right, guys, I'm gonna take you over there. Let me get that. Here we are. All right. They're calling it X Funds by Nicholas Wealth. Okay, so Nicholas Wealth is an independent investment firm that's helping X Funds. And then you're going to recognize some more names here. All right, but let's get into one at a time. Let's take a look. They're all applied for on November 21. Okay. So we start with what a great ticker, golden, right? JLDN. I'm surprised somebody hadn't taken it. You got all these other gold, you know, names, right? But of course, a granite. Well, granite went with Nuggy. GDXY went with the underlying GDX and added a Y. Um, Roundhill, in my opinion, a superior fund with leverage, used GDX and then used their W. Um, so Neos has got one. Doesn't fit their profile for names. But there's a lot. There's a lot of physical gold, guys. But I always talk about in the commodity super cycle, the miners are stocks, and if you get hit in a downturn, stocks go down a higher percentage than the raw metal. But overall, in the bull run, the miners have leverage to the price of the metal. So therefore, they run up a greater percentage. So I always allocate more into the miners in an income fund and in growth side. But I own a lot of physical. but I haven't, my physical was last bought 20 years ago. So I'm up magnitudes of money on my physical gold and my physical silver. So I've got plenty, almost too much allocated to that. But there's no counterparty risk like there is in a gold stock. The whole market drops 50%. Guess what? Gold and silver miners are going to go down 50%. They'll recover when people realize they're not part of the problem. They're the fix, right, to the fiat currency. All right, let's get into golden. Let's move through here. So here is the gold ETF. So fees and expenses, it's reasonable. I think I saw something like point 0.5, but it could be more. They don't have to, I think, even declare that in here. But the piece I want to get to is what's their strategy and what's the portfolio going to consist of? Okay. So what they're saying in the equity portfolio, holding equity shares of companies that have principal business activities in exploration, development, mining, refining, or production of gold. Okay. Because a lot of times when you see GLDN, you think gold, okay, it's physical, it's based on GLD. They're gonna, buy GLD, which is supposed to, its custodian is JP Morgan. They're supposed to hold physical gold for the amount of funds that are invested. So you own some physical gold. There's some questions there because JP Morgan and the big banks, I call them banksters, haven't always been that straightforward. They've been caught with their hands in the cookie jar. They've leased out gold. They've spoofed. They've sold more contracts on silver, right, to cause the price to go down by shorting it than there are silver ounces in the world. So, and then they get fined millions of dollars, but they made, a half a billion. So do they care if they got a 20 million fine? It's like you getting hit for $2, but you made 500, right? On the trade that quote, you broke the rules. Don't do that again. Please don't do that again. Give us $2 for the fine. And it's gone on for a long time. But when you get in a scenario, you literally overwhelm the market with the demand for physicality. So in the futures market, London, the US, Shanghai has been that way for a long. People are standing for delivery. They're saying, I don't want the money equivalent. I want the metal. I bought the contract. I wrote it out. I want physical delivery. And then the way they get out of that, they say, well, it's 4 to 6 weeks. And it's behind. But if enough people do that, they break the market. Okay. And what I mean by that is the banksters then are afraid to short. Because I know the custodians of GLD and SLV, the gold and silver, unlike Sprott in Canada, which says we actually have the gold. We give you a certificate. You can come in and inspect. Good luck with telling JP Morgan you want to go into, their New York facility or their New Jersey facility that's supposed to be holding gold for GLD. They're going to ignore you. I mean, we get ignored as a peoples relative to Fort Knox, right? I do think the U.S. has been resupplying, buying, just like the world central banks, buying a lot of gold lately. So if we do a revaluation of gold to from $42.20 on the books, can you imagine that? That's what the value of the gold that we supposedly have. And now I think we're reshoring gold and we have it that it's a race to have it. He who has the goal makes the rules, rules the world in some cases. So we're attempting to do that. If that gets revalued, guys, it'll get revalued at a minimum to the current price, 4,150, right? 4,150 from $42. That instantly turns the Fed having like an extra $2 trillion just instantly based on that. I think they could go and create a much higher number, 8,000 gold. Remember, it's just a value. 42 didn't reflect reality. 8,000 wouldn't reflect reality right now. It'll probably reflect reality in 18 months, 24 months. And so that revaluation is just it's probably going to happen if it happens, at our 250th year anniversary or 300 year, July, right? July 4th next year. That'll be a big deal, and I think they'll be pushed into doing that. Again, even in a high number like 8,000, 10,000, it only gets you 3 or 4 trillion. We got 38 trillion, almost 39 trillion, debt. And with interest rates, they may be going down now, but they're going to go up because inflation is really there. Anybody who lives in the US and the rest of the world, you guys know, look at home insurance, look at car insurance, look at so many costs. They're not going down, they're going up. Food is very expensive, you know. So, it depends on where you live and what you're buying, but still, it's inflation is way above the 2.5% that they would like it to be. All right. So what are they doing? So equity, they're holding gold. They have a commodities portion, providing direct and or indirect exposure to the price of select US listed exchange trading funds. So that could be that seek exposure to gold. Okay. So far I'm seeing they're going to own gold miners. They're going to own some GLD, which would my guess is how they get exposure to gold. And then options overlay, generating options premium through an options portfolio, the which involve using option contracts on the individual holdings of the equity portfolio as well as the underlying funds. Okay. So then on a GLD and on the miners, whereas a lot of the funds have been one or the other, right? They've been miners like a GDXY and Yielmax, a GDXW, and there's a few others, not that many on the miner. There's 20 on physical gold. Some use futures, a lot use GLD, right? Options contract. There are funds that just go on GLD without income, and there's some with income, anywhere from twice a year to once a year to monthly. This fund, by the way, all four of these are touted, guys, to be weekly, which is what people want, right? It's why Roundhill's grown so much. They deliver what people want. Okay. Now, somewhere in here, they talk about using futures, okay, and using futures options. Guys, I traded futures a lot in the last commodity super cycle. It can be stressful. It can be tremendous leverage. If you think buying a 3x ETF and possibly 5x ETFs that some of the companies have applied for, it's nothing compared to futures. You start buying futures contracts of gold, one futures contract, and you're controlling 100 ounces of gold. You know what 100 ounces of gold is worth today? It's a lot. Multiply 4,150 by 100, and you start to get a feel. It's almost $500,000. I know. I have, incremental amounts like that I hold. And thousands of ounces of silver, many, as they call them, monster boxes, which is 500 silver eagles. So, and obviously that's worth much less relative to gold. It's about 80 to 1 on the ratio, but that will come down substantially. Silver will outperform. All right. So, on the commodities, they're starting to talk about, okay, in addition to owning shares in the underlying funds directly, the advisor will use Flex. Okay. I was going to say we all know, you may not, if you remember Yield Max and you remember a lot of the methodology. Well, ironically, Jay's got his fingers in this. They're, titled through Jay's company, then is the one managing the options for this fund, which I'm not a big lover of that. And guess what? Some of you that watched Rod, right, and Scott Snyder at Misty probably don't have any love for him. He is a veteran of options since back in the 80s. So it's funny when I read the profile here, it said, oh, Scott Snyder, who was with Ameritrade for years, which is where Jay was. So I'm sure they know each other there. And then Jay brought him in to Zega, and then he's used him as Misty Fund. They don't mention Misty Fund Manager at all in Scott's bio. I wonder if that's on purpose. Okay. So I'm sharing with you what's going on, but at the same time, I respect Ray, and I respect Global X because they've been running. They got SIL, they got GOEX, a very well managed company. So I'm not going to let Jay or Scott Snyder ruin the party. But I hope those people know. But that's what happens in a, it's a small enough world of people who do what that. If they don't ask me, but if somebody asked me, I'd say get a different you know, get a different fund and get a different fund manager. But I don't think they can screw it up, to be honest. But I'll be watching, guys. Just wanted to tell you guys that. All right. So on Flex, that's a private, that's not where you and I buy our options, right? If we sell a put and buy a call, then we're vulnerable to assignment. In Flex, they're not. They have to use Bloomberg terminals. You have to have a high volume. It's institutional type money, not retail money. So there's a big difference. Other than that, it's options. Okay. But that's what's meant by flex. All right. Option strategy seeking. Additionally, the fund employs various option strategies. Focus on generating net option premiums. Okay. These premiums are important drivers of the fund's cash distribution, which happen on a weekly basis. Okay. When selling options, okay. The option strategies most frequently used by the fund. So, what they're doing is they're going to tell you all the things that they might do so they're approved for those, right? People have figured that out. Jay learned that game at Yeomax because Yeomax to get their butt kicked. Oh, well, we're going to do spreads in addition, right? So we don't get capped and run by. Well, that didn't work so well, right? So that's why I say, but I think the difference here is there is some aspect of this. Number one, they're mixing physical and they're using the miners. So they're gonna, place some GLD, some premium on gold itself. That's fine. Gold's gonna rise too. I got a 12,000 to 15,000 number in 5 years on gold. So and the miners are going to go up more. So then they're going to write calls on the miners. I read somewhere, and I got to find it, guys, that they're also using futures contracts on gold. Now we're talking leverage, and you can then write options on your futures contract, something I did as well. Okay. It's not stressful when it's not your money, but you talk about leverage, and I don't mind. Think about this. Think about if Misty had a 5 year life where it was going to go up higher highs and lower lows, or sorry, higher highs and higher lows in Misty for 5 years. What did you get out of Misty? 13 months, 14 months was fabulous, but then it died. Okay. Maybe 16. Well, I'm saying to you, there's 5 years in gold. Okay. Could be six, easy. So we're in the third inning. So use it for what it is and learn from the past. So I really don't give a shit about Scott Snyder and Jay Petroselli, right? Just don't screw it up, right? It might be your last job if you do. All right. So synthetic covered calls, we all know what, well, again, we don't. So what are you doing in synthetic? It's like double leverage. It's the piece that you sell a put, which is a bullish bet, and collect revenue, and that offsets buying the call. So you're double long, buying the call, you're betting long, selling the put, you're betting long. So in gold, most of the time, you're going to win in those things, especially if you do them over longer periods. Okay. So credit call spreads, I don't get excited about the spread, to be honest. Okay. Put spreads, okay. Spreads don't excite me, right? You can make a little bit of money, but if you're labeling it as insurance, it doesn't work that well. So, depending on the outlook, the advisor may also employ other option strategies, diagonal spreads, calendar spreads, collars. Collars can be good for price stabilization, cash secured puts, sure, absolutely. Naked puts is really what that means. Do it all the time. All right. So the fund's option strategies are designed to see regular generation of option premium. No guarantee it's going to happen. All the safety language. You're going to have distributions may include ROC. Okay, we've all learned about that collectively together. Okay, other fund attributes. This is good. Under normal circumstances, the fund will invest at least 80% of the value of the asset plus borrowing for investment in equity securities of gold industry companies, option contracts on gold industry companies. Okay. So far, that's just gold miners. Refining distribution of gold. So they're defining a gold company. Okay. Versus a silver company, because this one is for the gold, right? They're going to reverse it and make it silver. So in the industry, there is no 100%. There's no 70. There's no 50. There's no 70% silver mine. Because what happens when you mine silver, you get some gold. Well, gold's worth so much more than silver. Then you talk about your amount of revenue. How much of the revenue was silver? Well, since silver is worth so little, if you only produce 5% of gold, it's probably going to make it 35% of the revenue because it's so expensive. Again, so they're just saying we want somebody, and it's easy to have somebody where the gold revenue is 80. If you have a gold mine and just a tiny bit of silver, then you can be 95% gold, no problem. All right. So it's anticipated that the fund's assets will be allocated to each strategy approximately as follows. Equity portfolio, in other words, gold miners, 25 between 25 and 75. They leave it flexible. I like that. Better to be flexible. Commodities portfolio, okay, 25 and 50%. That's where you own the metal. Options overlay between 25 and 50%. Now you're writing your synthetics, your naked calls, covered calls, whatever you want to talk about it. Again, I was hoping to see somewhere I saw in futures, and I haven't really noticed that here. Um, and I'm sure it is because I should have marked it. But I spent a lot of time reading this before I prepared to do the presentation. I just don't remember where it is. Principal investment, gold industry risk. Okay, that's gold companies. Gold investment risk. Yeah. Concentration, gold industry companies. We know about that. See, what's nice is here, it's not a single stock fund. So they're not in the same issues of defining an ETF because they may own a bunch of gold miners and they may own GLD, right? If they own only GLD, then they have to be careful about how much they own and they have to do more options and so forth. This is a little better. I like it. Futures contracts. Okay. Derivatives risk. The futures. Okay. Futures contract. Risk of futures contracts include an imperfect correlation to the value of the futures contract and the underlying asset. Yeah, because you have backwardization sometimes, you have long extended times. There's various issues in the future. Love it though. You want leverage? You're going to get leverage on futures. And I want leverage in a bull market. I got a 5 or 6 year bull market. Oh, yeah, I want leverage. Right. Options contracts. Now, these are not talking about the option contracts like on the flex marketplace. This is option contracts in the commodities futures market in the gold. So you can do a contract and you can do a covered call with the option on your futures contract. So you can be naked, you can go out and just buy options on gold contract, or you can buy the physical contract. I say physical. Yes, it represents, as I said in the future, think of it this way. You buy a contract. A contract, I think, is 100 ounces of gold. Well, as I just said, that's 400 and that's 410,000, $415,000. and you control that with a small amount of money, 8, 9, 10, 11,000, maybe 13. I don't keep up with the exact. So you're controlling 415,000 right now of net value. So if gold goes up, every dollar that gold goes up, you make $100. If it goes up $50, you make 50 times 100, right? You make a lot of money with that. And so being in those futures contracts, then doing options on top of those. So this looks like it's going to give it a lot of leverage. And that is a positive. That's been my problem with like a GDXY. That's why I like GDXW, because it's using swaps on GDX. This guy is going over, there wouldn't be a futures market on the gold miners, but since they have an aspect to being in the physical gold and they're using futures, fabulous. And on the miners, they're doing, it's not going to be much different than GDXY on their miner portion, but on their gold portion, I figure gold's going to go up 3.5 times before we finish, and the miners will probably go up on average 5 or 6 times. So again, there's more leverage on the miners, right? We're not going to get that much more leverage, but we are on the metal through the futures. So that's fabulous. All right. So the same thing's going to be said. The only thing I want to add to you guys is that the silver is going to be just like the gold, only it's going to be silver. So the underlying asset's going to be, when they do physical SLV, but then they're going to go into SI contracts, right? In the futures market. So same thing, just replace it all. So that should be fabulous, just be really good. Because right now in silver, we don't have any weekly incomes for silver miners. We have SLJY from Amplify. Amplify is also the 12-year owner of SILJ. Well, Global X is the multitude of years owners of SIL. Those are the two biggest ETFs, okay, in the silver miner space. So SLJY pays monthly, utilizes both its ETF, SILJ, and buys individual miners and targets around 20%. So it only writes half the contract. It says I can get growth. But from what I see, they're not using any silver futures. This in SLV, whatever they call it, I have to look back, SLVX is going to have futures as well. So obviously they're going to use different people. That's not going to be your Scott Snyder and so forth, and probably not even Jay. So if they have those, I'd be surprised, right? Because normally the people that run the Bloombergs and go into that private institutional place, that's all about normal options. That has nothing to do with futures. Doesn't mean somebody doesn't know futures and couldn't do it, because I think Scott Snyder in his background was talking about some of that. Be interesting, guys. All right. So we get that one, very almost the exact same thing. Let me get to the other two, because there's something fascinating there. Okay, ETF risk. All the creation units, all of that stuff here. It's hard to find it. Oh, I know what I need. I need to go back up here and just go straight to nuclear. So I wanted to talk about the nuclear one, because guess what, guys? Nobody's had an income fund around nuclear. You got two big ETFs, well, three. You got URA. Guess who owns URA? Global X. It's outperforming URNN, URNM. It used to be the other way. Back before, when I was in it in 2000, URM was the big player and outperforming. URNM 1 year, I remember I owned it at like $40. It ran to 70 within 2.5 weeks. And then it paid a dividend of like $9. I was like, holy crap. Then guess what? The next year it retraced, it didn't pay a dividend, right? So I don't buy it for income. Nobody has really got it. UREX at Defiance, they timed the market in the wrong period of time. I'm bullish. They caught a real down wave, right? Because one thing that happens in uranium, it runs like crazy and retraces like crazy. It's just you're going to over time have higher highs and higher lows, okay? Because I'm bullish on uranium on the spot and on the miners. And this was on the physical. Well, it crashed. Defiance, I happened to look one day on Eurex because it was a 2X and it closed. Because when you go down, it'd be like starting a Bitcoin fund 3 or 4 months ago for MicroStrategy. Have fun. I imagine MST might get closed down, guys. Remember, that's a 200% leverage, same kind of thing. Eurex didn't pay any income, if I remember. So if they're not getting any income, you're not going to make, at least MST pays income. But when the price goes so low, that income, even if it's a decent percentage, is super, low. So this one, I imagine what they're doing is if they're playing in the futures market, underlying fund investing directly in uranium, because you have spot and then you have miners, just like the other funds, guys. And it's going to be from what I remember, they're all weekly. Synthetic covered calls, credit put spreads. Okay. So on that, they could be using a physical, right? Like Sprott has a physical fund for uranium. Um, but there's a lot of stuff out there. Okay. So I'll know more as this gets closer. The important thing is, guys, these aren't going to be out till February. But just understand, as I said to you, more and more will appear. Well, guess what? That's exactly what's happening. Let's see if we see. Isn't that funny? I didn't see anybody talking about that Scott Snyder disappeared, right? I had to double check that it's who it was, the same Scott Snyder. It absolutely is. Because in his bio on here, they don't mention. Let's see if I can even find that. Oh, yeah, I probably can. So you come in here, and it's additional information about the funds. It might have been management. Let me see. Additional information. Maybe it's. I went through them all. That's the problem when you got this level of detail, remembering. Okay, management. Okay. So it's this umbrella of Nicholas Wealth, right? And I read the bio on Nicholas. So you got your gold, you got your silver, you got your nuclear, and remember the keyword income, guys. And then rare earths. You don't really have a rare earths income. You have a number of rare earths ETFs. So guys, this could be pretty cool. So we talk about Nicholas. Look at the CFTC. That's your first clue that they're using also futures, right? That's not stocks. That's not securities. That's futures. Okay, portfolio managers. David Nicholas, right? Look at this. Is the CEO and founder of Nicholas Wealth. Okay. Quinn Berry, portfolio manager for the advisor. Okay. Mr. Berry serves as portfolio manager at the advisor, having joined the firm in January of 2025. From August 2023 to December 24, he was a trading manager at Zega Financial. Remember? So Zega under J, co-CEO of Zega, then they go out to the Defiances and the EOMaxes and they do the options trading for them, right? They're one of several, right? Neos does some of that. I mean, there are other, I forget who does Curves funds. It may be Neos, but there's people that's their function. we all know too well because people used to get, well, is Jay Max? No, Jay is Zega, but Zega is the options advisor. Then Jay's team comes in and becomes the fund managers, right? And we learned that in Max because they had so many different funds. All right, let's see if I can get the rest of these because I'm not. Oh, here we go. Okay, Quinn Berry, Scott Snyder, portfolio manager for the advisor. Scott Snyder joined the advisor in 2025 as senior vice president of trading. Okay. So they weren't dual hats. They may be over here in one Mr. Snyder has over 40 years of experience in the financial market and more specifically in the options market. Mr. Snyder led the trading team at Zega before joining Tidal. Started his career in 83 and for 20 years was an independent market maker on the floor of the Chicago Board of Options Exchange. And 23, this is where he would have met Jay and been involved. Mr. Snyder joined Thinkorswim as chief options strategy for a subsidiary of Thinkorswim. Jay was in a capacity with Thinkorswim. Mr. Snyder then helped the trading execution platform support and option education business for TW Ameritrade and then Schwab, right? Because in fact, TD Ameritrade I was with for 20 something years got bought by Schwab. All right. So people surface, they're around. The advisor has entered into a fund sponsorship agreement with each of Nicholas Wealth and Zega Financial, pursuant to which each sponsor is a sponsor of the funds. Okay. And sponsor of the funds a lot of times means putting the initial capital up, guys. Um, in the amount of the unitary management fee during months, how to buy and sell shares, boring, boring. Same stuff, very similar. Frequent purchase, fair value. Okay. So, guys, as much as I have a little concern when I see Jay and I see Scott and other Jay people, at the same time, I think people are professional enough. Global X is a winner. Global X should do well, as I always say, because of the underlying, right? If crypto in 3 months drove straight up to 400,000 and MicroStrategy fixed its issues, which I don't think either will, I'm just throwing an example, then Misty and crypto funds will all do well. Okay. But we got a problem. Something's rotten in Denmark right now. So just saying. And what do people do? They run for the hills, right? I've been part of companies. I was with a storage technology that was declaring bankruptcy and then sort of reorganized and survived. But as a sales guy, I left, right? It ended up being fine. I had a lot of friends stay. They did good. But, it's scary. So you're not bankrupt at Max, but they're one of the few fund families that are trending negatively, massively negatively, right? And they just simply weren't responsive and didn't care. So what are they doing now? They're creating new funds and telling you, oh, go buy these. Well, what about the ones that you broke, right? And all the NAV erosion. Oh, well, we want you in the targeted 25. These are going to perform, right? So don't look at my right hand, look at my left hand, right? Well, your right hand's the one that slapped us in the face month after month, right? They didn't slap me along. I figured it out, guys. I was always about total return. Now everybody talks total return as if it's just what you do. Well, it is what you do. But I had a hard time with that for a long time. I guess it finally sunk in with enough people lost their money. Now I don't have to badmouth Max. I don't hate them, but a lot of people hate them. That's because I didn't lose a lot of money. I was smart enough. Look, I've lost money before in other things, people. Everybody, you have to learn the hard way sometimes. All right. So that's what I got for you guys. It's exciting. So they're not giving us a ticker for this one. So maybe that means they don't know. what they want to do. But look at these NUCX for the nuclear income fund. Every one of those is a commodity super cycle, guys. So that's why I pointed out. If you want to learn, okay, that's my video, guys. I'm posting on YouTube. I put it out on my Patreon. So anybody that cares, okay, this is my Patreon. And if you have questions, which some do, just send me an email. I mean, you can message me on Patreon, but usually you have to join, even if it's a free member. And sometimes people ask me personal or private information, like, well, what do you recommend for, and it's out there underneath a video or something. So I prefer that people just talk to me. So here's a couple of things. Here's what I can do for you, right? This is just my YouTube. Hey, a few people watch it. I get nickels and dimes. Guys, I'm not in this for nickels and dimes. I'm in this for millions and millions now. This is my last hurrah. Okay. I'll do this through, I'll ride off in the sunset in 2031 because this commodity super cycle. Look at some of these guys. This is silver. This is uranium, the best performing uranium ETF. This is lithium, commodity. Okay. This is Brazil. Now, I actually like EWZ a little better from iShares. But these commodity funds are probably going to 4x, guys, in the next 3 or 4 years. That's what happens in a commodity super cycle. Brazil is 50% of the land mass in all of South America. It's going to rise. Okay. It's a broad, amount of commodity companies. There's even a few financials in there. There's a great financial company. It's kind of the darling of all of Latin America and South America is a financial. It's low interest, it's digital online banking, it's very innovative. Not Bitcoin, but very innovative. People love it down there. I know that's not thought of as a commodity, but I kind of, it's in the fund. I'm just being honest in EWZ. I didn't look at what's in here. Okay. This particular ETF, there's a few. Now, with these are more individual company run ETFs. So there's UserX, which is global. It's got a lot of Australian mining, which they have some great mining, gold companies, a few silver. GoX is newer and awesome, right? You can tell by the performance. So it's kind of outperforming the general GDX, right? Or GDXJ, not by a huge amount, but by enough. Is always a great fund. And then copper, and this is hydrogen. Just a few examples of things. I'm sure there's more, but I went to 101 kind of fast. So, in my Patreon, guys, I just launched Follow Me options trading. Okay. It's one thing I know after 40 something years of doing options. Guess what I'm primarily focused on? Although I had one or two that were non, I had an AI, a small AI company that I liked. I put my option trade in there, covered call. I'm starting simple. It's a monthly fee to be a member of that Follow Me. And I put my exact trades. I'm going to put recommendation. Don't put this trade on if the underlying is over this price or that. You have to give some guidance. I also, for some of you that don't have the skills, I teach options. I get it. I just got it done with 2 days, 2 1-hour sessions for someone that I recommended three. Almost everybody takes three, but this particular person, I think they were good enough at two. They may come back and want that third session. I don't make them pay. It's $75 for an hour. I'm telling you, you get somebody with my experience, but it's not the X's and O's only, guys. This isn't like, here's what a put is, right? This is what a call is. No, it's like, what's the strategy behind it? What do I look for? Because anybody, when they learn how to do options, can go put a trade on. But guess what? 90% of all people lose their money on bought calls. I prefer selling than buying. But sometimes I'll sell a put and buy a call. I'll put a combo on, or what's referred to in the commercial marketplace as a synthetic. But I want to be in the perfect position. I want to have retraced. I want to have time on my hands, right on my side. I want to go out 6 months or a year, because in the commodity super cycle, we go up, right? We go up for 6 months, 9 months, 12 months. Then we go down for 2 months, 4 months, or 6 months, depend on how long we went up. And that's what happens. It's higher highs and higher lows. All right, guys, enough of that. Go take a look at Patreon. I'm excited about these funds. I don't care who the management team is or the fund manager. I'll tell you what, I'll be yelling and screaming and writing letters if they don't perform and take them off my recommendation. But I don't think you can screw it up, guys. It's hard to screw up, right? I'll be seeing how they do. How much do they, if they're using futures on this, in this piece, and in this piece, they're going to capture a big percent of the upside, guys. The problem over in a single stock, there are no futures. I mean, there's swaps, but guess what? Yomex didn't use swap. Only Roundhill is, right? And when you go down, you lose a little bit on the downside. And the same thing here. And then they have options on top of the futures platform, not just options on the on the single stock. So sorry if I confused anybody. It's a technical and a detailed thing. Trying to do the best I can to skim over the top and sort of explain it to you. All right, guys, this is Bruce with Targeted Wealth Creation, not financial advice. Have a great one. Bye for now. Whoops. Right before I end, one of my classic typos. It's just a simple Bruce, not double E. Okay. Bruce2500 at gmail.com. Bye now, guys.